This is a great question. This was from a newer member in the UIG, and I thought it inspired me to create this audio. I personally believe, and I'm going to kind of back up my belief here, that investing in crypto and DeFi is a lot less risky than investing in, the stock market or, giving your money to Wall Street or the banks. And I'll explain why. Now, on the surface, we could say, ooh, no, crypto's way more volatile. It's a lower market cap. It's way more risky. And you would be right to say that if you were just comparing it as if it's like apples to apples. But it's not. We also have to look at the return you get, the custody you have. And the returns far outpace that which the banks or Wall Street or your traditional investments can give you. Far outpace it. Like we're talking 10x or more. Then the question you have to ask yourself is there 10 times more risk? If I follow really good security practices, if I, look at the fundamentals and invest in the fundamentals and coins and tokens and projects that have intrinsic value that are solving problems, I'm not gambling, I'm investing. Is it 10 times more risky? I'm pretty sure my Bitcoin, which I was buying a ton at around 19, I don't know what it's probably a 400 or 500% gain on it overall with the profit taking and laddering out I've been doing. There is no way. I think my stock portfolio is probably up like 7%. I'm an index fund, so like really well allocated, spread out. And when I look at that and I look at how much fake money is propping up the stock market and our economy, and yes, of course, crypto and Bitcoin and DeFi would take a hit if the stock market took a hit as well. They are more and more correlated. But what I'm getting at is if you play your cards right and if you invest things and if you're strategic and if you have good security practices, in my mind, there is no way. Maybe crypto is like twice as risky for 10 times better the return. And when you actually start looking at it from a risk reward ratio and you actually start digging in a little bit, it's like crypto and DeFi is to me, it's way less risky than even real estate. With cap rates being, it's pretty unrealistic to even cash flow here in most major cities. Two, tenants typically have, depending where you live, but typically have like way more rights than the landlord. And the rules and even the way that the income is produced, if it's through a corporation, is just more and more against the homeowner, the landlord. And you don't have custody of your house. You don't pay taxes or you do something they don't like, you don't own a house. They can take it from you. I like self-custody, and so when I look at that and I look at, crypto and DeFi versus real estate, I'm like, it's a no-brainer for me. As long as you're not gambling, you're not trying to chase yields, you're not investing in risky assets that have no fundamentals, you're not on risky platforms that are like low TVL and haven't been around for a long time, but they're promising you, crazy returns, and you're diversified and you're strategic with how you set up your portfolio, there's no way. You are taking on more risk, for sure, for sure. But when you look at the potential returns you're making, they far, far outpace your traditional investments. And so the risk-reward ratio is way in your favor in a well-built crypto DeFi portfolio than it would be in kind of the more traditional portfolio, which is why we've doubled down on this and why I've built my entire life around this because I see it, and it's not just theory to me. Like I've been a recipient of the kind of wealth and cash flow and money that you can get from this space. And I just want people to freaking know about this and stop seeing it as, oh, it's so risky. It's like, it's not when you compare it to traditional investments and you put the potential returns into the equation. That's my time. Really hope this helped answer the question if you've been thinking it. If you know anyone that this podcast could serve as like, hey, they're interested in crypto DeFi. You kind of want to on-ramp them, but you don't want to push them. And it's like maybe this audio experience in this podcast would be really, really beneficial to them. Share it with them. If you are in the UIG, make sure you log in, get involved. The members and the clients we have that are most involved get the best results. And I want that being you. So get on in there. And with that said, I'll see you inside.